Did you know that over 90% of millionaires have built their wealth through real estate? That's right. Real estate is the golden ticket, but here's the catch. Most beginners miss out on life-changing opportunities because they don't know where to start. Even worse, many end up making costly mistakes that set them back years. Sounds intimidating? Don't worry. In this video, I'll reveal 7 hidden strategies to invest in real estate the smart way, even if you're starting with little or no money. Stick around until the end because the last strategy I'll share isn't just a game changer, it could transform the way you think about building wealth. You don't want to miss this. Before we dive in, don't forget to hit that subscribe button. Next week, we'll dive into more ways of increasing your wealth. You don't want to miss it. If you're ready to take control of your financial future, this video is your ultimate beginner's guide to real estate investing. We'll walk through strategies that are beginner-friendly and actionable, so you can start seeing results within weeks. Grab a notebook, and let's dive in. Let's start with a strategy that's simple, smart, and beginner-friendly: house hacking. House hacking is the perfect way to dip your toes into real estate while lowering your living expenses. Here's how it works. You buy a multi-unit property, live in one unit and rent out the others. For example, if you purchase a duplex, you live in one side and rent out the other. The rent you collect can cover your mortgage, property taxes, and even utilities. Why house hacking works? House hacking is effective for several reasons. Reduced living expenses. By renting out part of your home, you can significantly reduce or even eliminate your mortgage payment. This means more disposable income for savings or investments. Building equity. As your property value increases over time, so does your equity. The difference between what your property is worth and what you owe on it. This equity can be tapped into for future investments. Gaining experience. Managing tenants provides invaluable experience in property management and real estate investing. You learn about tenant relationships, maintenance issues, and how to handle finances related to rental properties. Tax benefits. In many cases, you can deduct expenses related to your rental income from your taxes. This includes mortgage interest, property taxes, repairs, and depreciation. Sarah, a 28-year-old teacher, bought a triplex using an FHA loan. She lives in one unit and rents out the other two. The rent from her tenants covers her entire mortgage payment plus an extra $300 per month. That's $3,600 a year she's making just by being smart about her living situation. Pro tip: use an FHA loan to buy your first property. This government-backed loan allows you to put down as little as 3.5%, making homeownership much more accessible. But wait, there's more. House hacking isn't just for multi-unit properties. You can also rent out spare bedrooms in your single-family home, convert your basement or garage into a rentable unit, rent out storage space in your home or garage. The possibilities are endless and lead to one goal: financial freedom. Excited about house hacking? Just wait until you hear about our next strategy. It lets you invest in real estate without ever dealing with tenants or toilets. If owning property feels overwhelming, or if you're looking for a more hands-off approach, REITs might be the perfect alternative. A REIT, or real estate investment trust, allows you to invest in real estate without the hassle of buying and managing property. It's like buying a share in a company that owns income-generating assets like shopping malls, office buildings, or apartment complexes. Here's why REITs are a great choice for beginners. Passive income through dividends. Many REITs pay regular dividends based on their earnings from rental income or property sales. This provides a steady stream of income without requiring active management from you. Diversification. Investing in REITs allows you to diversify your investment portfolio without needing significant capital up front. Instead of putting all your money into one property, you can spread it across multiple properties through shares. Liquidity. Unlike traditional real estate investments that can take time to sell, shares of publicly traded REITs can be bought and sold on stock exchanges just like stocks. No management hassles. With REITs, you don't have to deal with tenants or repairs. Just sit back and collect dividends. How to get started with REITs. Research different types of REITs. There are equity REITs, which own properties, mortgage REITs, which lend money for mortgages, and hybrid REITs, which do both. Understanding these differences will help you choose what fits best with your investment goals. Look for strong dividend histories. Focus on REITs with a proven track record of paying dividends consistently over time. Use investment platforms. Platforms like Robinhood or Vanguard make it easy to start investing in REITs with minimal fees and low initial investments. For instance, let's say you invest $1,000 in a diversified REIT that focuses on apartment complexes across various states. That $1,000 is now spread across hundreds of properties. If one building has issues like unexpected maintenance costs, it barely affects your overall investment because you're diversified across so many others. Pro tip: research platforms like Fundrise that allow you to invest in non-publicly traded REITs with lower minimum investments while still providing access to commercial real estate opportunities. Think REITs sound good? Wait until you hear about our next strategy. It could turn your spare room into a money-making machine. Platforms like Airbnb and Vrbo have revolutionized real estate by making short-term rentals accessible to everyone. You don't need to own a fancy vacation home. Sometimes a spare room will do. Short-term rentals let you earn higher returns compared to long-term leases, because guests are often willing to pay premium rates for short stays. Here's how to succeed with short-term rentals. Furnish your space. Make it inviting with comfortable furniture and decor that reflects local charm. High-quality photos. Invest time in taking high-quality photos that showcase your property's best features. Good visuals can significantly increase bookings. Offer perks. Provide little perks like free Wi-Fi or welcome snacks. These small touches can lead to glowing reviews. Cater to specific audiences. Consider targeting niche markets like business travelers who need reliable internet access or families looking for pet-friendly accommodations. Let's look at Tom's story. A homeowner who had a spare bedroom collecting dust decided to list it on Airbnb after some initial investment in nice bedding and decor, about $500. He started hosting guests and earned $12,000 in his first year from that spare room alone. That's $1,000 a month for space he wasn't even using before. Catering specifically to niche markets can set you apart from competitors. Consider offering unique stays such as themed rooms or tiny houses which attract more bookings at higher rates. Who knew your extra guest room could pay for your Netflix subscription for life? Loving the idea of short-term rentals? Hold on to your hats because our next strategy lets you make money in real estate without owning a single property. Wholesale real estate is an exciting strategy that doesn't require much capital up front. Perfect for beginners looking for quick profits. In wholesaling, you find properties being sold below market value, put them under contract without actually buying them, then assign the contract to another buyer for a fee. Here's how wholesaling works. Find motivated sellers. Look for homeowners who need to sell quickly due to financial troubles or relocation. Negotiate lower prices. Once you've found potential sellers willing to negotiate their price down significantly below market value, assign contracts. After securing the contract at a lower price, say $80,000, find an investor willing to buy it at market value, $100,000. The difference, $20,000, is yours as profit. Sarah found a distressed property listed at $150,000, but negotiated down to $140,000 due to necessary repairs needed by the seller, desperate for cash flow quickly. She then found an investor willing to pay $150,000. Sarah pocketed $10,000 without ever owning the house. Use online tools like Zillow or PropStream to find distressed properties easily. Networking with local investors helps build strong connections leading towards quick sales. Think of it as flipping houses without lifting a hammer and without the headache of DIY repairs. Most beginners think they need high-demand cities like New York or San Francisco for big returns. But here's the secret seasoned investors know. Some of the best opportunities lie within undervalued markets. These smaller cities often have lower prices, but strong rental demand due largely to job growth and new businesses moving into those areas. When searching for undervalued markets, consider job growth and new businesses, good schools and public amenities, affordable housing with appreciation potential, low crime rates and improving neighborhood conditions, infrastructure improvements. 5 years ago, John decided instead of competing against saturated markets, he'd invest into smaller Midwest cities where he purchased 3 homes each valued at only $100,000. Today, those homes are worth $180,000 each, generating steady cash flow, $1,000 a month, resulting from their appreciation over time. Use tools like Redfin or Zillow to analyze market trends focusing on areas showing population growth and low vacancy rates, indicating strong demand ahead. Investing in undervalued markets is like finding designer outfits at thrift store prices. You look like $1 million without spending it. Think you're ready to hunt hidden market gems? Hold that thought because our next strategy lets you invest in large properties without massive wealth. Now I know what you're thinking. Syndication sounds like something only Wall Street bigwigs do, right? Wrong. Real estate syndication allows everyday investors to access large-scale properties, such as apartment buildings or shopping centers, by pooling funds together amongst several investors. This allows everyone involved to share in the profits generated from those assets, which are collectively owned by all participants within the syndicate structure itself. Here's how syndication works. A sponsor finds promising properties. They invite investors to pool funds to purchase and improve said asset. Investors then receive a share of the rental income and appreciation when the property is sold off at a later date. The benefits include access to high-value deals that you couldn't afford alone, experienced managers handling day-to-day operations, earning passive income from rental profits, and diversification across multiple units and tenants, reducing overall risk exposure. Sarah, for instance, heard about a syndication deal involving a 100-unit apartment complex costing a total of $10 million. Individuals could participate by investing as little as $50,000, receiving an 8% annual return, plus a share of the profits upon sale after 5 years, nearly doubling their initial investment. Pro tip: check out platforms like Fundrise or Realty Mogul to explore syndication opportunities tailored for beginners, with some allowing you to start with just $500. Syndication lets you own a piece of a skyscraper without having to clean all those windows. Our final strategy emphasizes becoming a big fish in a small pond instead of trying to be a jack of all trades within the industry. Focusing on building deep expertise in a specific area allows you to stand out from competitors and attract better opportunities overall. Your niche could be anything from flipping fixer-uppers and managing vacation rentals, to developing eco-friendly sustainable properties or investing near college campuses, focusing on industries like medical offices or tech startups. Why do niches work? You become the go-to expert in your field, can charge higher fees for specialized services, gain a deeper understanding of market trends in your specific area, build a network of contacts related to your niche, and spot opportunities that others might easily miss. Take Mike, for example. He focused on converting old warehouses into trendy loft apartments, and became an expert in zoning laws and historic preservation challenges related to conversions. Within 3 years, he was known as the loft conversion king in his city. Developers sought him out, he charged premium rates for his services, and he was able to leverage his connections effectively to maximize profits through specialization alone. Pro tip: research your local area to identify untapped niches. If your city attracts retirees, focus on affordable senior housing or assisted living facilities. Becoming a niche expert is like being the only person who knows how to fix a specific model of car. Everyone comes to you and is happy to pay for your unique skills. Now that we've covered our 7 main strategies, stick around for 3 bonus tips that could potentially double your returns. First, leverage technology. Use property management software to automate rent collection and maintenance requests. Invest in good accounting software to track expenses and income. Utilize virtual reality tours to show properties to out-of-town investors or tenants easily. Next, network. Join local real estate investor groups to connect with others and share insights and experiences. Attend conferences and workshops to meet industry professionals and expand your knowledge base. Build relationships with agents, contractors, and other professionals in the industry to grow your network exponentially. Finally, continual education. Stay updated on market trends and new laws affecting the real estate industry. Take courses and certifications to enhance your knowledge and skill set. Read books and listen to podcasts from successful investors to gain insights and inspiration. Stay ahead of the curve by constantly improving yourself. Real estate investing doesn't have to be complicated or scary. Whether you start with house hacking, REITs, or niche expertise, the key is to take action. Every successful investor began as a beginner. The difference? They started. So don't wait for the perfect time. Start today. Now that you know how to start building wealth through real estate, check out our suggested video for more money-making strategies. Don't forget to like, comment, and subscribe for weekly tips to grow your income. See you next time.